Hi folks, welcome to a new video of my forex trading course. I hope you're enjoying the course so far. In this video I'm going to be talking about 1, 2, 3 reversal formations. Reversal formation, it's basically a price pattern that may indicate a possible change in the direction of price during the following bars, okay? In the in the imminent future. Since I am a conservative trader, I'm only going to be taking all those conditions, all those reversal formations that indicate that price might be turning around in the direction of the main trend. Meaning that if we have an uptrend, such as it is this case, I'm only going to be taking 1, 2, 3 formations, or actually any reversal formation that might indicate that price is going to turn around to the upside. Okay, basically the way I treat reversal formations is at the end of a retracement of a swing. Okay, as usual, when you are in an uptrend, you have different consecutive swings. Okay. In the direction of the main trend, hopefully taking off from the dynamic area of support and resistance, which, as you guys know, is the area I like to base my entries from. So the way I treat reversal formations is at the end of every swing has two parts. Once you have the impulse and then you have the retracement. Okay, you have the impulse and then you have the retracement. Impulse, retracement, impulse, retracement, etc., etc. Okay. Obviously, in order to have a trend in a scenario, the impulse part of the swing must be longer than the retracement part. Otherwise, obviously, it wouldn't be a trend. Okay. So the way, like I say, I treat reversal formations is at the end of the reversal part of the swing, in order to spot weakness in the retracement and an indication that the retracement might be about to finish, and therefore a whole new impulse might begin in the direction of the main trend. Okay, basically what I do is, as price is retracing back, retracing back to the dynamic area of resistance, what I search for, of course, I mark my strongest levels of support and resistance, and then as price retraces back to those levels, I zoom into the short time frames and I search for reversal formations in order to identify a possible change in the direction of the future price action, and therefore enter a long entry. Long if I am in an uptrend, as in this case, of course. Enter a long entry, hopefully riding a new swing to the upside. Okay. There are a few reversal formations that I tried. There are actually many reversal formations. I personally tried few of them. I'm going to be explaining all of them throughout this chapter, but in this particular video I'm only going to be talking about 1, 2, 3 reversal formations. Okay. Firstly, let me talk about the theory, and then I'm going to show it to you on a real chart. Okay. A reversal formation, a 1, 2, 3 reversal formation is made out of 3 parts. Obviously, that's why it's called 1, 2, 3 formation. Let's assume we have, in this case, a retracement down, such as in here. Okay, let's assume we take this part. Okay, or this one. It doesn't matter, any retracement. Okay, in the shorter time frames, we will see price. Actually, I suck at drawing with my mouse. 1 second. We usually see price swinging down, okay, towards the dynamic area of resistance, and what I like to see, like I say, is a reversal formation of that area, indicating a price change to the upside. All right, fair enough. So as I was saying, we usually have price swinging up and down. Well, a reversal formation is formed by one last swing to the downside. Okay, one last thrust to the downside, then another pullback to the upside. This final thrust bottoming out or topping out at the dynamic area of resistance and around a confluence of different elements of resistance coming together. Basically, price bangs onto that area, retraces from there. The bears attempt another attack to that level, but they cannot quite outtake the previous low. Okay, they just they are outtaken by the bulls. Okay. And from there, price shoots to the upside in the direction of the main trend, as indicated in the setup chart. Okay. Once again, let me make the let me draw that once again. Here, let's assume we are in an uptrend, and this is our level of support. Okay, price in the previous swings, we create a whole new impulse to the upside, and then the retracement part begins. Okay, price moves up and down as it retraces, slaps that area of resistance, the dynamic area of support. The dynamic area of support comes around there as well, and the retracement bottoms out at that area. We retrace back from there. The bears try to unleash another attack to that area, but they just don't have any more the energy. Okay, they are dying out in momentum. The bulls are regaining to take control of the situation, and from there, price continues with a whole new impulse in the direction of the overall main trend. Okay. I hope that was clear enough. Obviously, if we were in a downtrend, let's assume we have here our main level of resistance, the dynamic area of resistance coming around there. We have a new swing, a new impulse to the downside. Price begins to retrace up to that level of resistance. The bulls have one last attack, topping out. They bang onto that level. They get rejected off that level. They try once again, but they cannot quite outtake the previous thrust, and from there, bang. They basically give way. Okay. The bears in this case win the battle, and a whole new impulse is created. Well, we are trying, or I'm gonna try to explain to recognize those reversal formations at an area of decision taken. Remember, guys, that reversal formations are only significant if they take place of an area of support or resistance, depending whether you are in an uptrend or a downtrend. Okay, any reversal formation taking place at any other part of the chart, at any other junction of the chart, I will personally pay no attention to it, only if they happen at decision taking areas. Okay, and those areas are of course the dynamic area of support and resistance, always in a solid trend, as in this case as per my 3 moving average conditions, and on always right off a confluence of different elements of support and resistance. Okay. All right, let's get down to business. Let's get our hands dirty with real charts. In this case, we are looking into the Australian dollar against the Japanese yen on the 4 hours time frame. And we have a beautiful uptrend, those moving averages nicely pointing up, parallel to each other, no crossover, price nowhere near the 100, etc., etc. By the way, I'm going to be focusing on this swing, okay, right there at that part of the chart, just so you know. We have also different elements around that area coming together. First of all, we have we have a trend line there, okay. This trend line linking linking this this swing low and the previous and the next one also projected in time. The trend line comes around there. This area will work as support. But as usual, I always say that one level of support is not enough. You want to search for more of them. then you have 38% Fibonacci. As price retraced back, it slapped right to the peep the 38 Fibonacci around with the trend line right there, and all that it takes place around the dynamic area of support. We cannot use the previous swing low, okay, because it comes way too far down from there, and by that time, if price is to retrace back down to that level, it would have been way too close to the 100 for my taste, so I cannot use that level to add it up into the confluence. But nonetheless, we do have, like I say, a trend line. We do have the 38% Fibonacci retracement, and of course, as usual, the dynamic area of support. Okay, so we have few elements coming together, forming a cluster, a congestion of different elements of resistance. And now it's time to zoom into the setup chart in order to spot a possible 1, 2, 3 reversal formation, okay, or well, any type of reversal formation, but in this case I want to focus on a 1, 2, 3 formation. Okay, so since the setup chart is the 1 hour time, is the 4 hours time frame, I'm gonna be zooming into the 1 hour time frame to search for those reversal formations. Okay, I'm gonna mark this on a with a vertical red line, so now when I zoom in I can spot it as I scroll through my chart. There we are. Okay, there we are. Right, as we can see here, what we have is the retracement part. All right, the retracement part of this the retracement of this previous impulse in the direction of the main trend. Remember that the main trend was to the upside. So basically, and we had our level of confluence of support around this level. Okay, so as I was saying before, price retraces back, slaps that level. Okay, from there it turns around. Okay, it's normal to see some quick very short-term reaction of that level. Okay, price reacts of that level, bounces to the upside. The bears still try to unleash another attack to that level. Okay, to this level that was our main level of defense. Okay, of the support. They just cannot take out this previous low. In fact, they make a higher, you see, a higher low. Okay, and we effectively have our 1, 2, 3 formation as the entry would given right as the pullback aspect, as the aspect number 2 is taken out to the upside after the aspect number 3. Actually, let me draw that. This is the aspect number 1, the first attacked. Then we have the bounce of, the bears in this case have rejected, the bulls have rejected the bears at this point, and therefore creating the aspect number 2 of the 1, 2, 3 formation. Finally, we have the third aspect, the third attack by the bears onto that level of support. That's the aspect number 3. And as the aspect number 3 fails to make new lows, okay, and as price retraces back, going above the aspect number 2's high, right there is where we trigger our long entry in the direction of the main trend. This is an indication. Okay, as you can see, it basically shapes up as a W formation, as a tiny W formation in the short time frames, so small that probably we wouldn't be able to spot the W formation on the setup chart, but it's rather clear on the trigger chart. And as we trigger, as we take out the aspect number 2, as we make new highs, our long entry is given. And well, as you can see, like I say, the entry would be given right there, and after a little bit of hesitation, well, the trend and the reversal formation, finally claim victory. And like I said, after a little bit of hesitation, price and the trend does the rest of the job for you, pushing price in your direction. Okay. Once again, we have 3 aspects. Let me recap real quickly. On a 1, 2, 3 formation, we always try to picture the W formation. All right. You have the first attack, that's the aspect number 2, the attack onto the level of support, I mean. Then the bears are rejected off that level. Yet again, they try one last time. Well, by the way, this rejection would be the aspect number 2. They have one last attack, being the aspect number 3, and as it fails, okay, and as it turns around, forms that W formation and takes out the aspect number 2, a few pips above is where we trigger our long entry. 2-3 pips above, whatever. Right there is where we trigger our long entry, and well, you know, a price moves in our direction. The stop loss on a 1-2-3 formation is below the low of the last attack. Okay, we have aspect number 1, aspect number 2, aspect number 3. All right, as we take out the high, that's our long entry. That's terribly drawn. Anyway, long entry right there. Okay. Well, the stop loss is 2-3 pips right below the aspect number 3. That's our stop loss. Okay. Basically, if we acknowledge this attack, okay, as failed, once the entry is given, the whole setup will fail. I mean, if this reversal formation is to fizzle out, the indication that the actual, you know, that the setup as a whole has fizzled out is when we actually take out this low, therefore making new lows and therefore making another attack to the all-time low, which is the aspect number 1. All right, so always remember, entry as you take out the low, the high of the aspect number 2, stop loss few pips below the low of the aspect number 3. Okay, that's entry, that's stop loss, strength is to the upside, and well, bam, there it goes in our direction. Okay, because we spotted a reversal formation, a W reversal formation, right off a level of support in an uptrend. This support held, we got our entry in the shape of that reversal formation, and we are effectively trading a whole new impulse to the upside. In fact, if we go back into the 4 hours time frame, into our setup chart, this is the very tiny W. You see that W formation? You can barely see it on the setup chart. That's why it's important to zoom into the trigger chart. This is the hesitation I was talking about before, and there it goes, the whole new impulse in the upside. Just as this retracement gave way to a new impulse, well, this retracement, upon a little bit of hesitation, like I say, bang, it went up. Just as once again we get the retracement and whole new impulse in the upside. Okay. Important to always keep in mind that the 1-2-3 formation is not enough in itself. Okay, we must now require a second condition to the 1-2-3 formation, and that is that the retracement trend line gives way at some point, somewhere in between the 1-2-3 formation before triggering our long entry. Let me go back actually to the trigger chart in order to show that properly. If there it is. This is the 1-2-3 formation we were seeing before. Okay, the retracement trend line, like I say, it's gotta give way before triggering our entry. That's important, guys. Okay, we have two retracement trend lines here. Well, one here, it's indeed very steep. It's so steep that actually, it's very difficult to draw. But then we have a second retracement trend line right there. Okay, a retracement trend line is basically every short-term trend line in the trigger chart that we can draw against the main trend, meaning that if the trend is up, if the main trend, meaning in the setup chart, is to the upside, any short-term trend we may draw on the setup on the trigger chart against the main trend, that's going to be our retracement trend lines. Okay, and we want those trend lines to give way before triggering our long entry. All right, it's important, guys, because the breakout of the trend line is the actual confirmation that is the actual confirmation that the that the 1-2-3 formation is carrying through. Okay, is delivering what we actually want to want to achieve with it, which is basically confirming a change in the price direction over the following days, minutes, whatever time frame you are trading. In this case, like I say, we have this retracement trend line. Also, we have this one very, very steep. The retracement trend line may happen between the aspect number 2 and 3, or between the aspect number 3 and the actual entry. Both scenarios are equally valid. Okay, let's assume we have a downtrend. Okay, a down retracement trend line. The main trend is up. So as price bounces back down, we have one last attack to the let's assume we have our area of confluence of support around there. Price reacts off that level, bouncing to the upside. We break the trend line. The bears unleash another attack. They fail to make new lows, and from there we trigger our long entry. Okay, you recognize this already. This is the aspect number 1. Aspect number 2, this is the aspect number 3, and as we take out the high of the aspect number 2, that's our long entry, and few pips below the aspect number 3, right there, that would be our stop loss. Okay, so in this case, the trend line breakout happened between the aspect number 1 and aspect number 2. All right, that's very clear. You have a retracement trend line, well, you know, the aspect number 1, as it bounces, as it reacts off that level of support, it simply breaks through the trend line. Okay. From there, like I say, the bears unleash another attack, but the trend line is already broken. At the first signal that this aspect number 3 is failing to take the aspect number 1, and therefore failing to breach the confluence of support, as the failure does happen, okay, right there, taking the high of the aspect number 2, okay, we can confirm, okay, we can verify that the retracement as a whole is finished, okay, and that the 1, 2, 3 formation has carried through, okay, has actually confirmed its validity, and therefore upon the takeout of the aspect number 1, not aspect number 2, sorry, that's our signal to enter long, and few pips below the aspect number 3, that will be our stop loss. Okay, I know this is a little bit messy, okay, it's a little bit confusing, I know that, guys. It's just a matter of practice, really. Okay, it's just a matter of training your eyes, scrolling back in your chart, trying to spot 1, 2, 3 formations, right of elements, right of confluence of support and resistance, and always in the direction of the main trend. And as you train your eyes, you will see that, you know, you can you begin to identify them more quickly. Okay, once you, like I said, you train your eyes, you will look at the chart, you will see the retracement. If you see a 1, 2, 3 formation with a retracement trend line breakout at one point between the aspect number 1 or 2, or between the aspect number 3 and the actual entry, well, you know that you have a sound setup, always trading in the direction of the main trend, always up on a bounce of a confluence of support and resistance, and always with the confirmation being the 1, 2, 3 formation and the trend line breakout at one point somewhere in between the 1, 2, 3 formation. Okay, you know that you are trading a high probability trade, because you are adding up chances on your favor. All right, all those different elements, trading in the direction of the main trend, the reversal formation, the bounce of an area of heavy, strong support and resistance, right off the dynamic area of support and resistance, etc., etc., will assure you that you are trading with the chances, with the odds on your side. Okay. All right, now it's time to look or to study what a bearish formation, a 1, 2, 3 formation is. Okay, we've just seen what a bullish 1, 2, 3 formation. Remember the W formation to the upside. right off a confluence of different elements of support. Well, now we're going to be studying the inverted W formation right off different elements of resistance. Okay, it's basically the same thing, just the other way around, upside down, and I want you guys to and I want to make sure that you guys understand both ideas. All right. Basically, as we were seeing before in the previous example, in a downtrend, price swings up and down, you know, like in any other trend, okay, and it has it's formed, every swing is formed by two parts, the impulse part and then you have the retracement part, okay, impulse part and then you have the retracement part, and then a new impulse part, etc., etc., like any other trending typical price action. Okay. Well, the bearish 1, 2, 3 formation, we've got to look for them at the tip of the at the end of the retracement part of the swing. Okay, this being the retracement part, this being the retracement part, etc., etc. You search for them at the end of the retracement part of the swing, always in the direction of the main trend, and right off different elements of support and resistance coming together in order to search for a short entry joining on this trend line. Okay, in this case to the downside. I'm gonna be focusing on this swing right now. Basically, I will right now I'm gonna explain the theory of a bearish 1, 2, 3 formation as the retracement goes up. Okay, as the retracement goes up in the short time frames in the trigger chart, right to our level of confluence. Okay, it slaps on it. There are two chances: either it breaks up to the upside, it basically pays no attention whatsoever to our last line of defense, or at least our strongest line of defense. If it pays no attention to it, if it breaches right through, okay, if it breaches right through nearing the 100, etc., etc., you know what to do. You simply take no entry. You cancel the whole setup. Okay, if instead this being our level, okay, our level to keep an eye on, price retraces back, slaps to it and respects it, okay, we find resistance of that level, price thrusts down from that level, and still the bulls have a little bit of energy left, a little bit of momentum left to unleash another attack, but they fail to breach, okay, or even they fail to take out the previous swing high, and from there they basically collapse. Well, that's a successful bearish 1, 2, 3 formation. Okay. As usual, we want a retracement trendline breakout at one point, okay, either after the one, between the 1 and the 2 aspects, or between the aspect number 3 and the actual entry, okay, this being the short entry, this being our stop loss. Just basically the same thing as a bullish 1, 2, 3 formation, but upside down, since we are now looking into a downtrend. Okay, don't you worry, guys. Now I'm going to be showing you a real example of a beautiful 1, 2, 3 formation that, sure enough, it netted some profits. In this particular case, as I was saying, we are looking into the euro against the Canadian dollar, also on the 4-hour time frame. Like I said, I'm gonna be focusing on that swing, because it's a prototypical bearish 1, 2, 3 formation. First of all, we study the different elements of confluence of resistance that we have. We have this downtrend, okay, linking the top of the trend with the previous swing high, and well, we project it, and all this area around here is meant to work as resistance, okay, like in any other trend line case. Alright, so we have one element around there. What else do we have? Well, let's draw some Fibonacci's as usual. It's overshot a little bit the 38, right between the 38 and the 50. Nonetheless, as you guys know, I treat the area between the 38 and the 61 as an area of resistance. I don't really pay that much of attention right of those lines, right to the level. If it's to the level, I mean, if it slaps the Fibonacci retracement right to the pip, well, great, but I consider that the whole area between the 38 and the 61 is a whole band of resistance. In this case, we are in a downtrend, so that's another element in our favor. Furthermore, what we have is these previous levels of sorry, 1 second. There we are. Okay, these previous levels 1 second. Okay, there we are. These previous levels of support, okay, and now turned into resistance. All right, previous support, price found support at this level. You see this area of congestion. Once broken and retraced, it found resistance of the previous level. That's 3 elements already. And well, finally, of course, as usual, I have my lovely area, dynamic area of support and resistance, which as usual marks the border of what a healthy trend is. Anything below this area means that we are in a trend, we are still trending. Once price breaches above, it means that the trend is endangered. Okay, so as you guys know, I like price to react of this area to the downside. Okay, so we definitely have few elements coming together at this level. Okay, price has retraced back to it, and well, it's definitely a decision taking area. So I was saying, many different elements of support and resistance. Price is bound to react in one way or the other onto those levels. Either it breached through and the bulls will get strengthened as a result, or it will bounce down of it, and the bears on this market, the people wanted to enter short, they will see this signal of weakness, and therefore they will rejoin short, and price will regain momentum to the downside for a whole new impulse, just as we saw here, and well, we now see here. Okay, now zooming into the shorter time frames, we've determined that price retraces back to that level. The 144.00 level is basically a level of resistance. We are now nearing that level as price retraces back, and we want to analyze in the short time frames what's actually panning out there, what's panning in the very real time, in the very short time frames on our trigger chart, in order to determine whether we we want to enter short, or whether price is actually not showing any weakness at all and is in fact breaking through. Okay, so for that matter, we zoom into our trigger chart. Let me mark this area with a vertical line. Now we're going to the 1 hour time frame, which will be our trigger chart for this case. There we are. This is the area. Okay, so as we established on the setup chart, this area is packed with different elements of resistance. Okay, this is the area we don't want price to breach through. We want price to slap to it, retrace back to it, bank clash onto that level, and from there begin to curl around into the downside. Okay, if that happens, we will be searching for our entry. In this case, obviously, since we are talking about 1 to 3 formations, I'm going to be showing you a prototypical bearish 1 to 3 formation. I'm sure you guys already see it. I'm sure you guys already see the inverted W, don't you? You already see the inverted W, or actually an M formation. Why call it the inverted W if we can call it M formation? So yeah, the bearish 1 to 3 formation, like I say, it's some sort of an M formation with the second part of the second half of the M not quite taking out, not quite reaching the previous swing high, the previous half, the first half of the M formation. It's basically a leaning M. Okay, it's some sort of a leaning M, something like that. The 1 to 3 formation, in fact, it actually may work as a double top. Okay, that's perfectly valid as well, as long as the second portion of the 1 to 3 formation, of the M formation or W formation, if we are looking into a bullish 1 to 3 formation, the second half, as long as it doesn't take out this high, the previous half of the price pattern, we are good to go. It doesn't matter whether it's a leaning M or it's a straight flat M, meaning a double top, etc., etc. Okay. as long as the the second attack by the bulls, meaning this attack failed to take out the previous one and therefore failed to breach our area of resistance, we are good to go. All right. Well, in this case, we have price retracing back, hitting that level. Price reacts off that level, bouncing down. One last thrust to the upside. That thrust also fails, and from there we take out right there. We take out the low of this being the aspect number 1. This being the aspect number 2, the last attack being the aspect number 3. As we take out the low of the aspect number 2, as usual, a couple of pips below, we trigger our short entry. Stop loss, just as we determined on the bullish 1, 2, 3 formation, right few pips beyond the aspect number 3. That would be our stop loss. This would be our entry. And well, as you can see, price decides to create a new impulse to the downside. Okay. But I don't wanna focus on that. I wanna focus on the 1, 2, 3 formation right here. Okay, right at the tip of the retracement part. Also, it's worth to notice how both trend lines, okay, both retracement trend lines, the one between the aspect number 1, okay, and the aspect number 2 has been breached, and also the one between the aspect number 3. Okay, and the actual entry has also been breached. Remember, 1, 2, 3. We have one first trend line linking this, the low of the retracement. Meaning the whole swing low with the next low we form the first retracement trend line. That one is breached. Then we have the last attack by the bulls, okay, the last thrust, the aspect number 3 of this M formation, of this bearish 1, 2, 3 formation. That one also fails to take this level, and from there we make new lows, breaking also the second retracement trend line. Once the second retracement trend line is taken, and once the aspect number 2 it's taken right there, that's a very clear, that point, that level, it's a very clear level to enter short. Okay, because, well, you have many factors on your side, as I was mentioning before. You have the downtrend, you have the bounce of an area of resistance which is holding price below. Okay, that's already 2 elements on your favor. Moreover, you are getting a reversal M formation. Okay, reversal M formation being confirmed by 2 retracement trend line breakouts. Okay, that's your confirmation, that's your entry signal, and your third element to add on the on the green lights. Okay, you're basically getting many elements on your side, adding up, stacking up chances, odds on your favor, and well, you score a profit. Entry, stop loss beyond the aspect number 2, and well, there you go, a whole new swing to the downside. If you're trading in a clear downtrend, as we saw on the 4 hours time frame, there are high chances that up on the signal, okay, signal came right there, up on the signal, the retracement trend lines breakout, the 1, 2, 3 formation, the bounce, okay, of the different elements of resistance. Well, you enter there and you're gonna score new profits. It's a high probability setup. Okay. Well, okay, guys, I hope you've enjoyed and understood, most important of all, that you've quite understood what a 1, 2, 3 reversal formation is. Okay, it's basically search for those informations for a bearish 1, 2, 3 formation or a W formation for those bullish 1, 2, 3 formation. Okay, remember, entry as the aspect number 2 is taken, stop loss few pips beyond the aspect number 3, right there, and always in the direction of the main trend, and always right off an area of heavy confluence or heavy support or resistance if you are in a downtrend. Okay. If you have all those elements on your favor, if you work them out together, okay, and you wrap it up, you have a sound trade plan, you get your information, okay. In this case, we have the information, the bearish 1, 2, 3 formation. You know you are riding a high probability chance, a high probability trade. You know, you're going to be scoring a winner 65, 70, 75, 80% of the times. The trend is going to be creating a new impulse in the direction of the trend. Okay, you do your homework, you do it properly, and you will be able to squeeze some profits out of a new swing. Okay. Alright guys, that's all for this video. As usual, if there is first of all, I recommend you to now scroll back in your charts, try to find those trending scenarios, try to find those 1, 2, 3 formations of areas of confluence of support and resistance around the dynamic area, and always in the direction of the main trend, and check it out by yourself. Train your eyes, get accustomed to them, because they work. Okay, they do work. I use them very often on my daily trading, and they work. Okay, so like I say, train your eyes, search for them, get accustomed to them, and you'll be able how they can become a very, very useful tool on your arsenal. Okay, in order to ride new swings, to jump on board on new swings that may be springing off on a clearly trending chart, okay, in a clearly trending market. Alright folks, that's all for this video. Any doubt you may have, any question, please feel free to send me an email. I will very gladly answer all your questions, okay? Alright folks, I'll be seeing you in the next video. Bye bye.